Hi everyone, welcome back to Blue Sky Forex webinar series. Before we continue any further, I would like to confirm if you can see the presentation and the presentation only and can hear my voice appropriately. Just write in the questions or in the chat section, please. Right, Jan is hearing an echo. Is everybody else hearing me fine, or is there also an echo on everybody's side? Okay, well, it seems to be fine for everybody else. So, Jan, if you can double check what's going on from your side, then it would be great. Before, I'm just letting the last people connect here today. And while we wait, I'd like to quickly go through the standard disclaimer quickly. All right. Contents of this material are provided by third party, not hot forex, and are for informational purposes only and do not constitute investment advice. Hot forex and blue sky binary assume no responsibility for any potential errors, inaccuracies, or omissions in this material. Nothing in this communication contains or should be considered as containing an investment advice or an investment recommendation or a solicitation for the purpose of purchase or sale of any financial instrument. Any views or opinions presented within this material are solely those of the author and do not necessarily represent those of Hot Forex unless otherwise specifically stated. Currency trading may not be suitable for all investors as it carries a high degree of risk to your capital. Trading such products is risky and you may lose all of your investment. Past performance is not indicative of future results. Poor fill rates, expiry times, market volatility, and platform errors could result in losing trades. Before deciding to invest in currencies, you should carefully consider your investment objectives, level of experience, and risk appetite. You should be aware of all the risks associated with foreign exchange and currency trading and seek advice from an independent financial advisor if necessary. So, with this out of the way, let's kick this off. Today we'll talk about Bollinger Bands and why we here in Blue Sky Forex think and feel that this is one of the most useful technical indicators that you will come across when trading FX. So our agenda, I'll quickly introduce myself, then we'll talk about two types of markets that you will come across during your everyday trading. We'll then go over a few of our base strategies, core strategies that rely on Bollinger Band formations. We'll talk about risk management, some dangers that you will come across when you're trading, and at the very end, as per standard, we'll have a Q&A. Okay, so if you have any questions during the webinar, just write them down and ask away at the very end. I'll do my best to answer them. All right. So I'm one of the senior traders in Blue Sky Forex, which is a part of Blue Sky Binary. We are an education, research, and trading group, and we provide 24-hour trade support and chart analysis to allow binary options and FX traders to trade safer. Blue Sky Forex is presenting this webinar on behalf of Hot Forex in order to educate you and help you become highly profitable currency traders. So now the two types of markets you will come across during your daily trading activities. First is price action, aka a trending market, and the other one is a mean reversion, aka a ranging market. Now a trending market is definitely more powerful because it generally is fueled by some significant news that actually makes the price move in a certain direction significantly. And this is definitely visually very presented in the charts that you analyze. Mean reversion is a bit easier to identify. You might notice this happening a bit more on the market as well, and definitely can be profitable no matter what trading strategy you use, you can anyways utilize this market condition successfully as well. Our BSB core strategy and also the formations that we talk about today, they are a mix of these market types. I mean, these strategies can be used on both of these market types, okay, depending on the formation, of course. Let's talk about Bollinger Bands specifically. We here in BSB, we don't use much indicators to trade because we like price action, but the Bollinger Bands are really, we have found that this is indeed the most useful indicator, technical indicator that one can use. Most of the indicators provide similar or the same data, right? The indicators, of course, are calculated differently. Some of them are lagging, some of them are not. And then based on their formula, the calculations are still generated by the past price movements, right? So Bollinger Bands, they consist of 3 lines. To just explaining for the ones who are not really familiar with this indicator yet, you will see as my cursor here, there is the upper band, there is the lower band, and there is the middle band. The middle band itself is actually the moving average. And as per standard, we're dealing with a simple moving average. Okay. Now the upper and the lower band are the standard deviations. Okay. So it's a really, visually it's a really simple indicator. It generally shows how far the price potentially can move. That's it. How far or within what range the price potentially moves near the moving average, right? That's as simple as it goes. Now, trading simply going long when the price hits the bottom band or the very low range, and going short when the price hits the upper band is not really the best strategy, because it can work few times, but during long term this doesn't really make a sufficient strategy. It's the same like going long when the RSI shows you 30 as in oversold, and going short when the RSI shows you 70 as an overbought. So that doesn't work for long-term trading, right? For consistent results. However, Bollinger Bands themselves, they form this kind of shapes and conditions that you can easily visually identify every day, that you can utilize to your own benefit and actually increase your winning chances and making the appropriate decisions when trading. So we're going to show these formations to you today. We'll be looking at 4 primary BSB core formations, which is the channel surfer, the waterfall. This you might have heard in different websites as well, perhaps. In forums, people talk about waterfalls. This is a relatively common term, to be honest. We'll talk about breakout, this one as well, and the hummingbird. The hummingbird is a really interesting formation, and we'll take a look at that at last. So let's take a look at channel surfer. This on the left side is a very premature picture of it. Here is a better one. Actually shows you a lot more information. We can define appropriate channel surfer here. So let me explain how it works. The upper band and the lower band, and also the moving average in the middle, you can see they form such channels. This is the upper channel, and this is the lower channel of the Bollinger Band, right? Now, if we're taking a look at an upward trend, when the price starts trending in a certain direction, on this occasion, on this example, we're dealing with the upward channel. What will happen here? You know that the price will never move in a straight line, if it's trending especially. We are dealing with a wave. The price always moves in waves, okay? So we are utilizing these waves. The waves, or the movements that are moving along with the trend, they are called the impulse waves. And the movement that goes against the trend, this is called the corrective wave. Okay? So we are utilizing the price movement in the beginning of the new impulse wave. As you can see the arrows here, we have the first impulse wave going upwards in the upward channel. Then it comes back and touches this moving average here. And this essentially will be our entry spot. We'll trade long along with the next impulse wave that's going to happen. And same on this arrow here. This is again a corrective wave, and again a next impulse wave. If you know the Elliott wave theory, this one will definitely help you out here a bit more. However, it's not really necessary to understand or know the Elliott wave theory in order to utilize this formation. The formation you can see all day long, happening on different time frames, even 15-minute chart, on 5-minute charts even. However, it's a bit more difficult to trade it on a 5-minute chart. I personally use 1-hour charts to trade and find these formations. And then, of course, like with all the strategies, it takes a bit of practice to get used to, and then properly utilize this and find the best entry spots. Okay, so again, you'll trade in the beginning of next impulse waves. As the price reaches the moving average on an upwards channel, you go long. And for the take profit, you can set the stop loss first of all at the lower band, which is completely fine at the moment of your trade entry. And your take profit, if you're aiming for a risk reward ratio of 1:1, which means your stop loss and your take profit are equal, then usually you will be putting your take profit at the upper band. If you want to aim for a bit more, a better risk reward ratio, of course you can set it to twice the amount of your stop loss. That's also fine. If your risk appetite is higher, you can certainly aim for higher take profit levels. So this is the channel surfer. This is actually one of my favorite VSP core formations, because it's easily identifiable and it's easily tradable as well. Okay. The next one is the waterfall. So let me show you how a waterfall looks like. The downwards waterfall on this example isn't the very best one visually, because it includes a doji here in the middle, and I wouldn't classify it as the best example. However, the upwards waterfall that you see in the center of the picture, that qualifies as a relatively good waterfall. So what happens here is you need to search for consistent, same directional, relatively stable candles. And by stable, I mean without large wicks. Okay, so the bodies should be relatively stable in relation to each other. Okay, so a stable movement in the same direction. And after 4 hours, if we're looking at a 1-hour chart, then after 4 hours, which means 4 stable one-directional candles in a row, you can start trading at the 5th candle going in the same direction. Okay? Now, something to keep in mind about this formation is that the waterfalls, they need to be fueled by significant news in order to carry enough weight, right? So the move needs to be strong and it needs to be fueled by news. As soon as you have identified that in the beginning of the waterfall or within the first 2 or 3 candles of the waterfall, there has been some significant news that are actually fueling the move onwards, then it's really great to trade this. Okay, so stable one directional candles with small wicks, so and you can trade after the 4th candle has formed. Relatively simple and straightforward, right? Okay, let's take a look at breakout strategy. This one is a bit tricky because this also needs to be fueled by news, and we are dealing with very fast and very significant moves outside the Bollinger Bands. Okay, so this is specifically difficult to identify because first of all you need to have a price consolidation. As you can see, it has been an extremely a choppy market before that. Then we have a relatively quick movement down. Then the market consolidates. The price consolidates. The Bollinger Bands constrict. They come together very significantly. They create this narrow neck, and as soon as the first candle closes outside the bands and the bands start to diverge heavily, and you have identified that the news has hit the market, then you can trade along with the movement. Okay, so remember, the candle has to close outside the bands. Visually, you can see this one closed outside the bands here. You have the narrow neck and then diverging Bollinger Bands, and then it's the time to trade this. Now please bear in mind that the best time to trade this one would be during the European session, and when the European session overlaps with the US session, that's where most of the action is taking place. So that is the best time to actually trade this formation. That is also usually when the most of the biggest news will hit the market. Okay, so keep that in mind. We'll be looking at, we'll be finding some formations on the live charts in MetaTrader 4 ourselves later on. So we'll definitely find few channel surfers there, perhaps even few breakouts. Now comes the hummingbird formation. Now very closely observe how the Bollinger Bands form a shape of like a Twitter bird, right? Without the wings in the back, right? So here you have the peak, here you have the head and the back, here you have the hummingbird for a belly, and here's the tail. Okay. Now my latest research has showed that this is not really the best formation to trade on a 1-hour chart, but it's best traded on a 15-minute chart, and I will explain why. As this is a bearish signal, it's a bearish formation, and you will be trading, you'll be going short at the peak. Okay, the first indicator is that the price has had to rally for the most time of the day. Okay, so during the European session and the first part of the US session, the price had to rally. Then the price had to consolidate here at the head level. And when the price reaches the peak, as you can see, the Bollinger Bands narrow, you will be able to go short somewhere here at the moving average, and you can go short for the end of the day. So it will be an end of day expiry, an example, or until you have hit your take profit or stop loss. Now, there is no specific rule for a take profit or stop loss for this strategy. You just have to see and analyze the market conditions and find out what levels work best for you. Okay. So this is the hummingbird formation. The reason why it's not best traded on a 1 hour chart is that when you have a significant rally during the day and you're looking at the 1 hour chart, then when the price reaches its peak and it's time to trade, it's already beginning of the next day's European session, and the price can get really choppy and doesn't really work out too well. So 15-minute chart for this one. The previous formations would be traded on a 1 hour chart. Okay, so all these 4 formations are part of the BSP core, very highly reliant on Bollinger Band, especially the channel surfer, which is one of my favorites. Let's open up the MetaTrader 4 with a live chart, and let's take a look if we can analyze and find some, first of all, some channel surfers from MetaTrader 4 directly. Okay, so to the traders who have not yet familiarized themselves with Bollinger Bands and the indicator and how to add it, and then let me just show you how. On the top left you have Insert tab, then you go to Indicators, then you find the Trend category, and then you select Bollinger Bands. Okay, as soon as you click it, the Preferences box will pop up. We're going with the period of 20 and 2 deviations, and we'll always apply the indicators to close. Okay, a dark violet, I think it's good to differentiate it from the price color, so let's do it like this. So now we have the Bollinger Bands on our chart. Okay, so the very first thing you see here, that it is a live chart. This is the latest hour, and this is where the price is currently moving and where it's situated at. Looking here, starting from the 16th of February this year, the price has been trending downwards. This is not really the best channel surfer formation, because the Bollinger Bands are widening, diverging and converging too much. The channels should be a bit more stable than that. Okay. However, as you can see, while the price is trending downwards, it's still lingering between the middle line, which is the moving average, and the bottom Bollinger Band, right? So it's lingering between the, inside the lower channel of the Bollinger Bands. As soon as the price reaches the moving average, it's bouncing back down, going further. Again, here it reaches, let me just zoom it up a bit just so you can see it better. Again, as it reaches the moving average here, again bounces down. Same thing happens here over and over again. Okay. However, after this a brief consolidation, the price, something happened here, right? So the price went wild for a moment, but still then continued down. And here again you see a few hours ago, as the price reached the middle band, it started going down again. It still is bearish. So what you have to observe here is that the Channel itself in overall is going downwards. This indicates a downward trend. Okay, so the moving average is going down. The upper and the lower band are also both going downwards. It's beneficial if the upper and the lower band are relatively parallel to each other, stable, not diverging and converging here like it is right here. Okay, so let's go further a bit into the past. Let's see if we can find another. And this is a Euro USD 1 hour chart, by the way, if you didn't notice. So let's take a look what we find. What to find here. Here we have a brief ranging market going. The price is bouncing between the lower and the top band. Again, we have some trending of the price here. Again, it's moving inside, mainly moving inside the upper channel. But here, what happened here was the beginning of the London session, European session. So yeah, we have a lot more momentum here. But still, the general trend continued upwards, and here you can see how the price reached the middle band, meaning the moving average, and continued trending upwards. Still, not the best channel surfer formation here. Let's see if we go further into the past. Okay, nothing to see here. We have two unstable Bollinger Bands here at the moment. Here again, very choppy. We have a ranging market here. Okay, that's quite a long ranging market. Okay, here we can analyze the breakout formation. Okay, the price is it's not really choppy. It's actually consolidating after this fake out here. The fake out is when the price breaks out for a brief moment, but then comes back into the band. So, I mean, every formation is not really perfect. So you can have these fake outs happening during the day, but this was mostly due to it not being fueled by news. Most likely this is also not fueled by news. I haven't checked the news calendar for this specific day, but as you can see, the price actually started trending upwards. So something still happened here. Okay, so you see the price consolidating, the bonds getting really narrow, creating this very tight neck here, and boom, then the price continues. First of all, it closes outside the bands and then continues up for a few candles where it starts ranging for a very brief moment, consolidates, and then you have another breakout going upwards. And this is already the start of a decent trending move upwards. Okay, I mean, not the perfect examples. We should find the one showing with the actual proper news. Okay, let's go a bit further to the past. Okay, here you have a beautiful channel surfer. Although the bonds are really not stable, but you have a really strong trend, and you can really see how the price is again repelled and supported by this moving average going upwards. Okay. Now the best entry would be after you see the price being supported by the moving average around 3 times. Here you can see it has one bounce. We'll consider this as a second one, and this one has the third bounce from the middle band, the moving average. And here on the fourth touch, And this would be your entry, okay? And you can essentially ride with the trend going upwards. On this occasion, you would have been able to use the trailing stop relatively successfully, but using a trailing stop actually requires a lot of practice. So if you are scalping, then the trailing stop wouldn't really be useful, because the price fluctuations can make you hit your stop loss relatively quickly. But if you are a position trader, if you are a longer term trader, if you want to aim for these large pippage gains, maybe 60, 70 pips, then using a trailing stop with a gap of maybe 15 or 20 pips, that would be sufficient. Okay. Using a trailing stop is a completely other topic. It requires most likely a webinar on its own. So not really good for starters. Okay. Let's see if we can find a waterfall formation here somewhere. Just scroll back. Okay, seeing something similar, not really the best one, because the candles are not too stable. They're not stable enough, so you have smaller candles here. You have doji here in the middle, so that doesn't really work out too well. Finding these waterfalls just like this on the chart can be challenging, because as I mentioned before, they should be fueled by significant news in order to carry a significant weight and be tradable. Just any random move that you have consecutive green or red candles, that really doesn't work that way. Okay. Okay. This is a bit already getting closer, because you can see all these candles being relatively similar in size, not too large wicks, but I'm relatively sure that this move was not really fueled by news, so it ended quite quickly, right? However, you have 4 of these candles here. If you could have traded on the 5th candle going downwards, there would have been not much, but a 30 pip gain approximately. Okay, so this would have been relatively okay trade for scalping reasons. Okay, second. Let's find one more full waterfall here. The waterfall's something that happens really relatively often during the day. Oh, price is getting really choppy here. Okay, here's the one. Going with an upward trend, still moving significantly on the upper channel. Of course, not really many bounces, and in terms of the bonds and how they are situated with each other, this parallel, a consistent and stable upwards movement between the bottom and the upper band, this is something you should be aiming for when you're trading the waterfall. Okay, so there is not much convergence or divergence between the upper and the bottom band. So this would be your ideal a channel surfer formation in terms of the upper and the bottom band. Of course, the price movement here, it does move upwards in the upper channel, but there is not much really bounces from the middle band, so I wouldn't trade this because you only have three. I would consider this as one because it's really close to each other. Okay. So let's get back to the slideshow and give you a couple of recommendations for risk management and what are the risks and dangers that you will come across. Okay, I will answer all your questions in a bit, don't worry. So in terms of risk management, do not risk more than 1% of your total account equity every trade. I mean, on a single trade. Okay, because otherwise you will expose yourself to too great of a risk if the price moves against you. So try to keep it at 1% maximum. Of course, it also depends on your account capital. If your account balance is $1 million, then the percentage per trade should even be lower. Okay, because you want to minimize the risk. We always tell our traders to trade as safe as possible. So yeah, keep the risk minimal like that. If you have lost more than 5% of your total account equity during the single day, simply stop, walk away, because then you will survive to fight another day. Okay? Don't start over trading, don't start revenge trading, trying to earn back the capital that you have already lost, because that is a recipe for disaster. Your losses can be times greater when you want to earn back your losses that you lost the same day. So simply shut your program down, take a break, walk away, and even if the conditions are good, you can trade later. Try see if your strategy suits the market conditions later on during the day. If not, just check how it goes the next day. Okay. There is also the Kelly risk management formula that you can use, which includes your win rate, the profit factor inside it as well. You can definitely find it online yourself. It's pretty easy to find. Based on that calculation, based on that formula, 1 second. Why is it not showing? Just confirm if you can see the presentation now. It's good that I haven't changed the slide. Sorry for that. Okay. Now it should be good to go. Okay, sorry for that. Don't know what happened in the application itself. Okay, anyways, the Kelly risk management formula is at the bottom here, as you can see in red. Now, based on this formula, based on this calculation, if the percentage reaches higher than 5%, it's still preferred or reasonable to keep it at 5%. Okay, so take the 5% as the total maximum. So this is in terms of risk management. Chart calibration, this is also very important. Okay, If you are trading the BSP core strategies, 1 hour chart time frame is preferred, except for the hummingbird formation. The hummingbird formation, as per my own technical research, is best traded on 15-minute charts. Okay, because then you can trade at the very end of the day. You will need a program that provides you access to 4 hour, 1 hour, 30-minute, and 15-minute charts. These chart time frames are really optimal to suit all your trading and chart analysis needs. If you're usually trading on 1 hour charts like me, then zooming out to 4 hour charts to confirm the market conditions, and zooming into 15-minute and 30-minute charts to pinpoint your trade accuracy accurately, then these 4 time frames should be included: 15-minute, 30-minute, 1 hour, and 4 hour. Daily charts can also be used for more broad picture of what's going on the market, but 4 hour charts will do. What we here analyze, we analyze candlesticks, not Renko charts or anything else. Candlesticks are the most favored chart price method, because this to our mind provides the best information of what the price is actually doing, and it provides the candlestick patterns. As you can see, there are certain reversal patterns that you can analyze, like dojis, etc., shooting stars, hammers. This can definitely be incorporated into your trading decisions. Okay, if one formation or one strategy tells you to go long, but you see dojis forming at your point of entry, indicating a possible reversal is upcoming, then it's not really wise to take the trade. Okay, so if you have two contradicting advice based on your strategy or chart analysis, then it's best to stay out. Then just skip the trade. Don't worry, there will be enough opportunities coming up in the future for you to take advantage of. Okay, so it's never a problem to skip a trade. All right. Now make sure you are not trading from a tablet or from a phone. If you want to be serious with trading, you should have at least one properly sized screen, so you can fit maybe 6 or up to 9 currency pairs on one screen to analyze. Having too small of a screen will not provide you with an adequate environment to appropriately analyze what the prices are doing, especially if you want to have some indicators or technical indicators assisting you. Okay, because the charts, they get really cluttered up. The more indicators you use, the more difficult actually it is to analyze the market conditions and what the price is doing. I would suggest to use maximum 2 technical indicators. Maybe just apply Bollinger Bands on the chart, and then 1 or 2 oversold and overbought indicators like RSI or stochastics. Not more. Don't overcomplicate it. You'll make it too cluttered and really difficult to analyze. Okay, and when you are selecting the pairs to trade or to analyze, then try to reduce the correlation as much as possible. In example, Euro USD and UST Swiss franc, they're really highly correlated. Okay, so don't trade these or open up trades on both of these currency pairs at the same time, because essentially you're like trading the same pair, right? In terms of calibration, as you can see on the slide, trades should have relatively tight stop losses and take profits. Now this actually is highly dependent on your trading style. Whether you scalp or whether you position trade or day trade, the stop loss and take profit levels definitely vary a lot. Okay, if you're scalping, then you're aiming for these small gains of 15, 20, maybe 30 pips, and you're aiming to make a lot of trades during the same trading session, right? Maybe up to 10 trades or more. So having these tight stop losses and take profits is completely okay. When you are position trading, however, then you are aiming for these large gains of maybe 100, 150, and 200 pips. So it's not always reasonable to have tight stop losses or tight take profits. It depends on what risk reward ratio you are aiming for and your trading style. How many trades do you want to make per day? Okay. So at first you should be aiming for risk reward ratio of 1:1. That means your take profit and stop loss are equal. If your take profit is 20 pips away, then your stop loss should also be 20 pips away from your entry. After time goes on, after you become more familiar and more comfortable with trading, you should positively increase the risk reward ratio and aiming for 1:2, meaning that your take profit is twice the size of your stop loss. That makes your each and every trade potentially earning more than potentially losing, right? So it's a positive change. However, don't make it too high, because otherwise you will never hit your take profits and your trades will last forever. Okay, so keep that in mind. Don't overdo it. Start small and continue increasing as you become more experienced. So, about some currency trading dangers. Don't trust bots. This is one of the main rules that we follow. And then the reason behind this is that based on our experience and our research, market research, and this kind of expert advisor research, most of these don't work. And most of these are simply created by slamming few indicators into one expert advisor, creating random conditions, and then setting it online. I mean, it may work for a few weeks even. It may work for a few hours, but on long term, they are designed to empty your account. So be extremely careful if you decide to go, so to say, the easy way and let the bot or a robot trade in behalf of you and make these trading decisions. If you want to try one out, definitely you can, but do it with a demo account. And if everything works for 3-4 months on a demo account, then you should do sufficient research and background check of that specific robot, and then only set it live on your live account. But also use very small lot sizes to make sure that your account is not emptied quickly and at all, right? Because your ultimate goal is to make money with trading. It's sad but true. 5% of the traders approximately actually make money of trading on the long term. Okay, so don't feel down. Don't feel disappointed. That is what the analytics show. Years of analytics show that most of the traders fail, and the reason for their failure is not having a trading plan, not having a trading system, not having a trading strategy, and being not emotionally attuned to trading, because trading is an emotionally really exhausting activity, especially if you put a lot of hours into your trading session each and every time. You should plan your trading really wisely. You should choose a certain trading session, I mean, a certain time of day when you're trading, and get used to those market conditions. Okay, it's not really wise to start trading with or during the European session on one day, the next day you trade during the Asian session, third day you're trading during the late US session. The market conditions change during the day and based on the trading session. So it's best to choose a certain time during the day when you are available to spend 2, 3, 4 hours analyzing the charts and make the trades, and simply get used to these conditions. Okay, and then each and every day you start a new personal trading session, you feel more comfortable because the conditions are most likely relatively similar than what you experienced the previous trading session. Okay, so you will make yourself a more comfortable environment to trade in. So keep that in mind. When you blow one or two accounts, don't worry. It's part of the training. It's part of learning. It's not a bad thing. It shows you that you're doing not necessarily wrong, but you should be doing something differently. You should change something. You should either change your strategy or change your trading plan, or you should adjust your trading session to match your trading strategy. You should change something, okay, and then start again. And then this is the part of the learning process. It's totally fine. Even when I started, I emptied my first account. The next account that I emptied I didn't actually empty it. It was an expert advisor that I let to trade in behalf of me. So I've learned my lessons as well. Everyone who has started has learned the lessons, and then this is how we learn. Okay, so start small, and it's okay to lose at first. In terms of signal services and signal rooms, there are a lot of them out there. However, very few of them are actually legitimate and do provide proper information. I can't really name any at the moment on this webinar. However, if you do want to have yourself assisted by somebody else's signals, then again you need to do sufficient research and background check, ask for audit trails and performance records that can be verified before you start following anyone's signals. Okay, most of them don't work longer term again. Even if they have a good record for 1 or 2 months, that doesn't mean that they are profitable throughout the half a year or a year. Okay, if the signal service has one bad day and you follow all the signals, that means you can empty your account again. Okay, right, so that is it for today. Let me just pull up the questions section, and let's start going through them. Okay, Mutabka is asking, what are the best settings for the Bollinger Bands? The best settings, or mostly used settings, is with the period of 20 and the deviation of 2. Okay, so let me just quickly pull up the MetaTrader 4. Let's go ahead and add the Bollinger Bands here again. So period of 20 and deviation of 2. Okay, and you apply it to close. Some use Bollinger Bands with period of 25 and a combination of 25 and 2.5 as deviation, or period of 20 and deviation as 2.5. Now this already depends on everybody's personal preference. So don't hesitate to test out what suits you best. Okay? So This is important. Always when you start using a technical indicator, you have to fiddle around with the parameters and settings and then analyze the price movements and what the indicator does in order to find the best suitable settings for your trading style. Okay. 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 Which Prem Kumar is asking which strategy is best suited for 15-minute time frame. Um, from these four formations, the hummingbird is the one that is best for a 15-minute chart, although you can find a lot of decent channel surfers on 15-minute charts as well, although you will see the channel surfers uh, a lot more often bouncing not from the moving average in the middle, but going nearly down to the lower band if we're talking about an upwards trend. So the lower time frame you choose, the more choppier it gets. Okay, even with the channel surfer. Palopi is asking, is 1 hour the best time frame to trade the Bollinger Bands? Now, I personally love 1 hour charts. This is where I do all my technical chart analysis. This is where I confirm formations, depending on the time of day, depending on the market conditions. I do zoom out to 4 hour time frame in some cases to see what the market is doing on a larger picture. And in some cases, I do zoom into 30-minute and 15-minute charts to pinpoint my trade entries. Okay, I don't go to 1 minute or 5-minute chart because this already these time frames don't provide enough information for me. Okay, it doesn't really give me the information that I need. Prem Kumar is asking, is it possible to scalp using 1 hour time frame? Oh yes, of course, it's definitely possible. It's a bit more difficult though than on 15 or 30-minute charts, and it highly depends, of course, on what formation you're using again. But it's definitely possible. Um, if you use 1 hour charts and if you are if you have identified a ranging market, okay, then you can also use Bollinger Bands to go short at the top band and take profit at the middle band, and you'll have exactly 15-20 pip gain. However, if you are trading this method during the ranging market, going short at the top band and going long at the bottom band, then you have to have identified a proper ranging market that is not extremely choppy. And previous price action needs to show you that the price is actually being properly contained by the top and the bottom band. Okay, only then you should go with this approach. Okay, Carlos is asking, can I repeat the hummingbird strategy? Yes, for sure. Just a quick rundown. The Bollinger Bands, they need to form a shape of a hummingbird, as you can see here. Okay, so the price has had to rally during the day, meaning European session and the first half of the US session, the price had to make a rally. You should be analyzing 15-minute charts, and when the Bollinger Bands converge and create this peak of a hummingbird, right? Then you will be going short. It's a bearish formation, it's a bearish signal, and you'll be going short at the peak somewhere here. Okay, in some cases it can go back up to the upper band, and this can be your trade entry. You just have to see how what the price is doing at that very moment. If it's lingering around the moving average when it's at the peak, then it's good to go short, and you can exit the trade when the US session ends. Okay, so you go down here, you go short. Okay, this is only a bearish formation. If you try to analyze, or if you try to find this formation on a 1-hour chart, then after a decent price rally during the European session, when you want to trade at the peak, you are looking at trading in the beginning of or during the next European session already, where the price gets really choppy again. Okay, where there's a lot of volume. This is not what you actually aim for. Okay, Prem Kumar is asking how many pips you aim for take profit and stop loss on the 1-hour time frame, or is it based on upper and lower band? You are right. It is based on an upper and the lower band, but that depends on the formation. If we're talking about the channel surfer formation and we are using the 1-hour charts, let me just open up the example here in the presentation. So, as you can see, the first arrow here, if you enter a long trade going upwards, then my stop loss would be at the lower band at the time of the entry. And as I'm aiming for 1-to-1 risk reward ratio, then my take profit would be at the upper band. So I would have traded this green candle here. This, of course, the example is brought on a 10-minute chart, but that doesn't matter. The main reason is to show the formation and how it looks like, right? So for a channel surfer, you can use the Bollinger upper and the lower band for your take profit and stop loss. For the waterfall, you should really consider what news is actually moving the price, and it requires experience to understand and be able to recognize how far the price can go. Okay, it might be 2 candles in the same direction after the 4th one. It can be 3, it can be 4, and depends on your risk appetite as well. So this is something you have to analyze during the run. Okay, when you're actually trading that certain formation at that certain moment in time. For a breakout, it's the same as the waterfall. You should really check what's actually driving the breakout, if anything is actually even driving the breakout, because if nothing is really driving the breakout, then after the first candle closes outside the bands, even if the bands have constricted and created this very tight neck, then the price can still reverse relatively quickly. This is what we call as a fake out. So essentially it's faked the actual breakout, right? So you have to be careful for these. For the breakout formation, you can if you see that there have been some news, you can scalp it if you want. You can go for 20 pips or 15 pips movement, and that's totally fine. But I would trade breakouts for a larger gains. But in this situation, there has to be significant news. Okay, we have hit our 1 hour mark. There hasn't been any further questions either, so we'll be wrapping this up. Thanks everybody for attending. If you have any further questions, then don't hesitate to send an email to webinars@hotforex.com, and they'll be more than happy to answer to any of these questions you have. Again, thanks for attending. We'll see you next week. Take care, everyone.